Traders massively overcomplicate the process and make trading a lot harder than it needs to be. They work with too many confluences, too many different ideas or strategies, and too much discretion behind their trading. But in reality, there is no need for any of this. You can keep your trading incredibly simple, so simple that it might blow your mind, and you'll actually get better results. Now, I don't care what strategies you trade, whether you focus on basic retail concepts, smart money concepts, ICT, supply and demand, or price action, you are most likely guilty of overcomplicating things, regardless of your approach to your analysis. If you're trading with basic retail concepts, it's likely that you have 5 or more different chart patterns. You have trend lines, indicators, and support and resistance to consider. It's just too much, and it gets chaotic and builds a very unclear picture as to what the market might do next. But just because you trade some smart money approach to the markets or some price action focused approach to the markets doesn't mean you are special. It doesn't save you from this overcomplication problem. You are more likely to apply too much discretion and get caught up in chaos among different timeframes. So what do I mean by this chaos, discretion, and overcomplication? Let's head to the charts now and I'll show you. Let's discuss the trader who works with the more basic retail concepts. So trend lines, chart patterns, support and resistance, and indicators. Now, this is a pretty chaotic way to trade, because generally how most of these traders will work is they will try and line up a bunch of different confluences and then take a trade and pretty much hope for the best. There's no real systematic way behind any of the setups, and every trade might look pretty different. So we have moving averages, we have stochastic indicators, we have support and resistance, we have trend lines to consider. Let's have a look at how a trader might get caught up in this. So the first point where I could see a trader getting caught up here is, of course, when we start to break through this support floor here. They may see this as an opportunity to sell a pullback, right? We have a resistance, which is obviously a very important support, broken and now turned into resistance. So a trader who sold there is obviously going to be stopped out and in a bad way when the market pulls back up to the trend line. Now then, the trader may see things differently. They may sell the trend line and lose. Or they might see that it's above the moving averages, it's back above the resistance, and now we've had a trend line breakout. So what we should do, because of all these confluences lining up, is buy, right? We have a resistance, now turn support again. We have moving averages with price above it. We have a trend line break with price above it. We have a trend line break here. So buys could be taken from this point. And obviously, as you can see, both of these are going to turn into a loss. Just because there's simply so much going on here, it's difficult to stay on track. If we see the support and resistance level and we start to focus on this instead of the trend line, or we focus on this second trend line instead of the first one, the picture is different. Moving averages, are we above, are we below? And the stochastic, are we oversold, overbought? All of these different things, they just cause a lot of chaos in your mind and make it difficult to win, let alone the fact that these concepts aren't grounded in too much logic, so they're not massively accurate in the first place. So it comes down to a lot of discretion and a lot of chaos for the trader who trades with basic retail concepts, and it just makes life way harder than it needs to be. Now, when it comes to the more price action focused way of trading, the problem is discretion for the most part and an inability to just stick to the higher time frame, more clear picture. So here we have a potential trading opportunity, which would be a good one. We have a higher high, higher low shifting into lower lows. Reasonably, what would be good is to just wait for a pullback retest of this supply zone and then sell. That would be a solid trade. But the problem with this more smart money or price action way of trading is that people get lost in the noise, lost in the chaos, right? So they may see that the zone gets missed here, and when it starts selling off at this point, they start looking for opportunities to sell inside of this range with stops above the high, which leads them to be stopped out, or getting into trades with bad risk reward. Now, the other problem is then focusing on every small piece of structure. Maybe you see structure around here gets broken to the upside, and instead of selling, you start believing that this market is now going to go up. So you start buying, looking for new highs, but they don't come through. So the big problem with the more price action focused approach that people have is just an inability to play the bigger picture. And instead, they start digging into all of the lower time frame, messier price action, which leads to these losses. So I've showed you what it is that traders do wrong. But now, what should you be doing if you want to do things the better way, the right way? Well, without a doubt, the first thing that you should do is create yourself a trading system. Most traders don't actually trade under the confines of a system. They don't have a set rule base, and that is why every trade looks completely different to the previous, and why it's so hard to maintain a consistent, successful flow with their trading. Now, a system will include a step-by-step confluence process, so a direct analysis process that you will apply, such as I will begin on the daily and do my structure markups. I will then step down to the 4 hour and find my supply and demand zones. I will then go to the 1 hour to find entry confirmations and then get into my positions. It will cover your entry, your target, and your stop loss rules that you will use on every single trade, as well as management rules as to how you're actually going to look after the trade and nurture it on its way to a successful exit. And you need to have clear exit rules as to how to get out profitably to maximize your profits and minimize your drawdowns. So I thought to help you out with your system building journey, I could just show you a very simplistic system or entry model that you can repeat pretty much consistently. So in this entry model, we are looking for a market that is pushing to the upside, which means a market that is forming these higher highs and higher lows, every high higher than the previous. When we've identified the market trend and it's bullish, we then want to look for imbalances, which is an open price range. I'll show you a real example in a moment on a candlestick chart. Once the imbalance has been filled, we are looking for a retest of a demand zone, so then the price will move higher from there. And the entry model, the system behind this, is to buy a retest of a demand zone after an imbalance has been filled and target the previous higher high. I'll show you an example on a real chart now, so you've got a bit more clarity around how you can start trading this system. Right, so the first thing we're looking for is a break in structure, okay, which is going to be where the market moves from a high into a lower low and then lower highs and lower lows. If you're looking for selling opportunities, you need to be in a bearish market. So there's a couple examples I can show you here. We have 2 breaks of structure. We're going to focus on the first one at the moment. So we have this supply zone. The market then sells off. The market pulls back up, fills this imbalance here, trades into this supply zone, and provides an entry from there. Now, this one's a little bit trickier because there's also an imbalanced supply zone at the extreme. So you may be drawn towards selling from this one, meaning depending on which zone you picked, you would either get the trade or miss the trade. Now, this is kind of the zone that kicked off this break in structure. So the zone that breaks structure actually has some weight behind it. It's something you can focus on in your trading if you want to simplify the process more. You could say, I'm only going to sell from the zone that broke structure, only going to buy from the zone that broke structure. So trade number 1, if we use that zone that broke structure rule, would be entry upon supply, stop loss above supply, target down into the low. This would be a 3.94R trade, as you can see, which would be a nice profitable play out. Now, this one's a lot more simple. What we have is a sell-off. This is an efficient range here, which means there is no imbalance. An imbalance, by the way, is a big open price range like this between some wicks. So this would be the imbalance. Now, if you trade ICT, you might know of this as a fair value gap. It's pretty much an imbalance renamed and remodeled. But an imbalance is just an open price range like that. So we see a lower low form. The market pulls back up, trades into the supply zone just at the top of this imbalance. That supply zone would be where you sell from. So this is obviously a very simplistic system. Win rate on this is probably going to be around 50%. So you're going to win half the trades you take, lose half the trades you take. 40 to 50% will be good. And then the risk reward is obviously very profitable. If you are winning half the trades you take and you're making a considerable amount more on the wins than you lose on the losers, this is going to be a nice system for you to trade. So that is just a simple basis of a very simple trading system that you could start to employ. So what have we got for our rules? Because we did say we want our rules lined out. First, we want to look for a break of structure. When we have that trend developed, we want to find an imbalanced supply or demand. And then when we have that imbalanced supply or demand, we will be placing a sell limit or a buy limit on the zone, and we will target the next swing high or low. So that would be our list of rules. Very simple stuff. Break of structure, find the imbalanced supply zone, market pulls back, we use a sell limit on this zone, and we target the next swing low, okay? For a buy side idea, it would be exactly the same, but the other way. Break of structure into a new high, pull back through an imbalance to retest an imbalanced demand, push away from there using a buy limit, and target the next swing high. Simple system. You can expand upon this, and I will help you with a free course as well, but we'll get to that in a little bit, so let's move along. Once you have a systematic list of rules lined out, you need to then backtest your system. Backtesting is where we use past price action to trade in a simulated setting just as we would in real time. And what it allows us to do is collect a large amount of data on a strategy. So I suggest you backtest your system over 12 to 36 months of data. 1 to 3 years will give you a good indication as to how profitable this system is, if at all, and it will help you to understand the nuances, like how long it takes a winning trade to play out, how long it takes a losing trade to play out, what your average monthly return is going to look like, and generally what you can expect from your trading. My favorite platform for backtesting is FX Replay. I'll show you that now. So just to quickly show you the software I use for backtesting, it's FX Replay. Now this is obviously on the surface just like TradingView, but what we can do here is get years worth of data and we can trade in a simulated setting. So let's say for any random reason we wanted to buy this pair, we could place an order, we can select 1% risk, and it's going to automatically calculate all of that for us. And then when this trade either wins or loses, we will get to see the result of that in real time down here by looking at the unrealized and realized profit and loss. So this trade might lose, I would imagine so, given the entry that we used, but that's just going to knock down the profit. And actually that's damaged my real backtesting, which sucks, but that's okay. And you'll see real-time results basically. So it's just like trading a live account, but you do it in a simulation. This is where we can collect a whole bunch of data. You can go back years and years and years. So if we went to the 1 month time frame, you can see we have data here all the way back to 2003. Now, I'm not sponsored by FX Replay, but I think the platform's really good. I do have an affiliate link in the description, so if you decide to use it, it is an affiliate link. But either way, I don't care. Just make sure you get FX Replay. The thing about a simulator or backtesting software like this is that you get all of these brilliant analytics. This is where a lot of the information that you want to collect is going to be included. This stuff is invaluable to your trading journey, so I definitely recommend that you get some form of backtesting software to test out your systems before you start risking money with them live. And the final step in this process to improvement is tracking your results. You want to track the results of every trade you take in your backtesting and also in a demo trading setting so that you can get a feel for real markets and then make improvements with the information you collect. Here's an idea of the kind of information you want to collect on a trade. So this is a trade I took personally on the left, and then we can see we've marked down the entry criteria and the trade criteria. We had a sweep of equal lows followed by a bullish break of structure. We used 5-minute demand for the entry using a buy limit. The stop loss was beneath the low and we targeted the swing high. Now, every trade you take could look just like this, okay? This exact same format can make you a consistently profitable trader. I trade these setups a lot myself. But you want to build that little playbook of setups. So every trade you take is going to look similar to the last. Even if you have 2 or 3 different setups in total, you shouldn't have 50 different trades that look completely different. Now, some of the other important metrics to track are, of course, the time in trade. So you can see here we have 4 hours and 30 minutes is how long this position was running for. The risk reward ratio and the profit secured on this trade was plus 4.1% at 1% risk. Now, time in trade is something you should absolutely not overlook. You need to track this because what happens is traders get impatient, they worry and they close trades early. But if you've got a clear idea as to how long your average winning trade is going to take, that gives you the confidence you need to hold that trade for 4 hours, 3 days, whatever it may be, under the confines of your system. And of course, we want to put a big focus on maintaining a positive risk to reward ratio to make sure that we are winning more than we are losing over the long term. So that needs to be tracked as well. So here is the process from the top down. First, I need you to go and build or learn a system. If you need support with this, click the top link in the description. I have a free course on system building. Second, you should backtest the system. I also show you how to do this inside of that free course. Third, you should focus on demo trading. So once you've done your long-term backtesting, focus on trading with fake money and journal every single trade you take in the manner that we just looked at. And once that is done and you are feeling confident and successful, you can transfer to live trading and maintain your journaling to continually improve and build your edge long term. This is the process that every trader should take to become successful and simplify their work so that you're not constantly at battle with the markets with that chaos, stress, frustration, anger, and all of those negative emotions that your chaotic way of trading brings you. Most importantly, just remember, you need to keep it simple. I hope you enjoyed that class. If you did, make sure you watch my system building course. It's called 7 Steps to Profitable Trades. I'll show you how to build trading systems and then transfer your trades from good trades to great trades to perfect trades, and then what you need to do in terms of backtesting so you can become a profitable trader. The link in the description at the top is going to take you to this. It's 100% free and you can get access right now.